Hey guys, a big welcome here from Sammy and I for the last session of 2022. A big Merry Christmas to everyone who's watching this, and a massive thank you from Sam and I and Tristan and the rest of the team at CCI for all your engagement and following us and reading all our newsletters throughout this year. It's a shame that the CCI Musketeers haven't come together in the last session, but nonetheless, we really enjoy all of the engagement, and yeah, it really helps us to live our passion in life and do what's really fulfilling for us, which is researching crypto and sharing the insights and guidance to help you create wealth in the space. And what I will say is, if you've been reading our newsletters, you really enjoy them, please take 2 seconds to leave a quick review. I'll drop the link in the comments in the description, and yeah, just share your experience, because there's, I'm sure, a ton of people that are watching this video right now that maybe don't have the newsletter and they would love to see other people's experiences. It really helps people to transition and say, okay, there's clearly a ton of value in this. And a reminder for anyone that hasn't already signed up, there is 1 month free access that we've just released into our group, so go and jump on the link, is featured at the top. And also there's a full money back guarantee. So for whatever reason, if you did come on board, you did your first month for free, you paid for your second month, and you decided you didn't like it for whatever reason, which I'm sure you will, because we believe it's the best newsletter out there, as it encapsulates everything in one place, which no other crypto newsletter does. And you can just message us and ask for your money back, and we'll give you a full refund, no questions asked, after the first month. So yeah, please do get involved. Please do leave that review. Take 2 seconds to do that. It means a lot to us. What I will say as well before we kick off, we have been running our competition. So day one is almost done. There is a ton of prizes. I've put so much effort into this. It took way longer than I expected, but it's really, really worthwhile. So some of the prizes in there, there's a one-on-one crypto strategy session with me personally. There's $250 of Bitcoin from Independent Reserve. We've got 3 Binance merchandise boxes. I don't know if anyone would want one of those at the minute with everything that's happening, but they might do. There's NFTs.
I do.
Yeah, I do too, actually. They look really cool.
That's our confidence for you.
Yeah, absolutely. There's NFT giveaways. There's NFT Apparel, who put up a $100 voucher. So you get access to their clothing and cool stuff. The Mighty, it's not the Mighty Ducks. What was the...
Peking Ducks.
Peking Ducks.
Yeah, that's right.
Oh, the crazy designs.
Yep.
And also Stress Dads as well has put up an NFT. I think it's $120 US, 0.1 ETH in value. So a ton of cool prizes and a ledger device today. So make sure you get your entries in before it's 12 a.m. Australia time that it closes, and then the next day will open with a new prize. So be sure to jump in and get involved for your chance to win a ledger today. Sammy, have you been watching much of the football? Much of the World Cup?
I want to say I'm not. Okay, so every single year I have. This year I have not been paying attention, so apologies. But I know who's in the finals.
Yeah. Well, almost in the finals. Well, in Australia,
almost, they call the semi-finals.
Yeah. In Australia, everything's like a final, and it took me a while to get used to. I was like, oh, it's the final, and it's like realize that it's just a preliminary final, they call it. But yeah, so I would love to know, and I'm sure Sammy would too, if you want to comment below, who do you think is going to win? Last night was not necessarily a big upset, but Croatia got knocked out. I'm surprised that they get so far in this tournament every time, given the population of their country. But Argentina are looking pretty strong. Maybe France and Morocco tonight. So yeah, do comment below. Let us know who you think might win the World Cup. I'm hoping that Morocco can take it out. That'd be quite a unique experience, I'm sure. The other thing, one last thing before we jump into this session, I did want to say, for anyone that is really wanting to achieve their goals and outcomes into 2023, I ran a 4-hour session with our Elite Mastermind clients yesterday on planning for next year and really getting across everything. And I just urge anyone that's watching and listening, if you haven't done any planning for next year, if you fail to plan, you're planning to fail, quite simply as the saying. So make sure that you put the work in. If you're a VIP client of ours, make sure you've got your RPM plans done for each area of your life to ensure that you get the outcome. And if you're not a client of ours, make sure that you at least plan something somewhere and have something blocked out to ensure that you achieve your goals. Goals aren't just going to fall in your lap. There's consistent work and effort and energy that needs to be put in order to achieve them, achieve the results and outcomes you desire. So make sure you do the work. Anyway, that's enough from me. I'm going to hand back to Sammy now. Sammy, if you can share with me a little bit about the Binance update. So there's a ton of FUD getting around at the minute, but obviously we still need to exercise caution. So can you just give us a quick overview, as I know that you've been guiding our clients on this step by step as to everything that's happening. How did it come about? What's currently going on? What's the positive out of this? Because as we discussed before we started recording, there's a lot of benefits out of this as well. I foresee too. So do share with everyone that's tuning in, mate.
Yeah, look, I'm not sure if there was an exact trigger. It could be actually FTX as a whole going down. I think the next big eyeball, the attention just shifts from FTX over to Binance. I guess they're the biggest in the space.
Or every other
people
exchange
are just,
as well. It was
yeah, that's
FTX,
right.
and then all the exchanges were suddenly under the fire, and I know crypto.com got absolutely smashed, didn't they, for a short period of time?
They did, absolutely. So look, I think it's a coordinated, and I've been saying this to clients, it is like a self-fulfilling prophecy. There's Twitter accounts out there that were very accurate in predicting or just pointing out the questionable natures of a lot of the practices of these exchanges that have gone down previously. They've come out again and are pointing the blowtorch on Binance, and it's sort of causing, again, the self-fulfilling prophecy, and a lot of mainstream media outlets are now red hot on top of it, because as you can imagine, this happened with FTX, this happened with Luna, it happens with Celsius. So yeah, there's a lot of a blowtorch on them, and it forced CZ, the head of Binance, to come out with a quote unquote proof of reserves or an audit from an auditing company, and he was very vocal. This is an audit and whatnot. Now, this immediately allayed a few fears, but when you look deeper, it wasn't actually an audit. They brought in an auditing company to look at the assets on their books. But it was a very narrow scope of what they were allowed to look at, and it was agreed to by Binance. And that's not an audit. If you bring in a company to do an audit, it's open season. They have to look at all the books. And what I think a lot of us that are just been in space for a while, and we've seen some of these things go down, it's really only half the story. You're looking at it with one hand tied behind your back. If you're just seeing what they're holding, you need to see what their liabilities are, because that is where these exchanges previously that have gone down, that's where they found the issues, especially like a BlockFi. That's a great example. They were a mainstream lending platform, but the issue was they were caught up because they borrowed a lot of money to Alameda, lent out to Alameda and whatnot. And we know what happened to Alameda. They went under. There was a lot of paper bit going out there, so the leverage got wiped, and then there's a lot of money that people were owed and they couldn't get, and suddenly they were in the hole. So you just don't know where Binance sits. You don't know where their books are, and it just amplified and amplified. And CZ was coming out constantly, but he's aware that how SBF acted during FTX. He's aware how other, like Mashinsky from Celsius, was acting as well on Twitter, and you can see he didn't want to say too much, or we're completely fine, or you're just saying absolute statements because it could come back to bite him on the ass. And so he's been doing the best he can. He's been as transparent as he can be. I think Binance are trying to tidy up what's happening behind the scenes. I personally think they're on shore footing right now, and what I think is happening right now, self-fulfilling prophecy. It is a stress test of their collateral, of their withdrawal functions, and right now they've had, I believe, $5 billion in 24 hours removed from Binance itself, which is an incredible stress test. USDC went down for a little while there, withdrawals, but that he explained that's only because USDC has a tight relationship with Paxos that's tied one-to-one through US banks. They couldn't actually facilitate the amount of redemptions that were coming through in time. So kind of in a way, that's why crypto was sort of founded, to get around how slow and inefficient the mainstream banks were. So kind of ironic that happened, but it's a perfectly plausible situation that was unfolding. USDC is now open again for withdrawals. So really nothing, it hasn't really skipped a beat. And I guess we were discussing the positive, something was happening with Binance. I mean, CZ said these kind of volumes are fine. We experienced more during FTX, during Luna, all that. Yeah. So I think they've been prepared for this moment for a while.
I was just going to say, from the research, it wasn't even one of our top 5 withdrawals in a 24-hour period.
Yeah, that's right. So I think this isn't maybe the panic stations test that maybe they were expecting, which is great. But we were saying beforehand that, and I mean, I was pretty adamant. I think this is a fantastic thing for the space because right now Binance is number one. They are essentially the foundation holding everything in crypto kind of together at the moment after such a tumultuous period. And it really, for say something in my eyes, I think for Bitcoin to go down to 12, 10K, it needs another cataclysmic moment, another systemic issue like a Binance going down, like a Grayscale. And I think we're watching this very closely because we know if it goes down, then it's going to cause quite a few issues for a while longer. But in a way, I like this because again, it is stress testing Binance. It's showing what they're made of. And if they come out on the other side of it, we know they're fairly strong. And they'll tidy up whatever they can behind the scenes. But yeah, look, I think this just shines a light on centralized exchanges, and they have to improve trust, transparency, and their reputation in the space. And again, we'll get into the newsletter because this is one of our things we're going to be looking at. But I think this is going to bring in the big institutional players in traditional finance. They would see a big gap in the market right now for a trusted party to move in, gain massive market share with full regulatory authority behind them, FDIC insurance, all that. Big money. You can be assured that when they're moving in, nothing, even this bank run with Binance, we can talk about stress testing and all that, but that should never come into it. You should never think to yourself, I'm putting my money on this platform, it could go under really easily. I mean, that shouldn't really be the thought process in your mind. You should be reasonably confident the money you put in there is either insured or there's not going to be an issue where, they might not have your money in the moment of crisis. So I guess that's what I wanted to get across. And yeah, very interesting times for the space. And just broadly with sentiment, I think everyone and whatnot that's been here over this last few phase has a bit of recency bias, a bit of the doom and gloom cycle just lodged in the back of their brains. And they expect everything to happen exactly the same as what's happened previously. And I just think Binance is a different beast. And I mean, I could be totally wrong. And that, if I am, who cares? But from everything I see and hear, I think this is definitely a coordinated FUD test of Binance without a lot of actual, I don't want to say merit behind it because there might be merit, I don't know, but there's not what you were seeing with the smoking gun with FTX. There's not what you're seeing with Luna and whatnot. So yeah, we've advised our clients quite quickly, and everyone watching this should be a client or thinking about being a client. But I personally, and Joe's in the same mode, that zero tolerance policy. If you smell the risk that's there, even this rumor, blah, 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 we got in front of it with FTX, we got in front of it with Luna, we got in front of it with Celsius. You just have to take your crypto off the platform, hedge your risk, even if it amounts to nothing. It buys you time and allows you to analyze the facts on the ground with more data later. You can re-enter if you want, but you've saved losing all your capital. And it doesn't matter if you're waiting for an order on a trade. Forget it. Just cut it, move away, step back, wait for more data, because there were huge institutional firms and hedge funds that crazily got caught on FTX and lost about 80% of their funds and all got wiped out. So this happened to professionals. And all of, I guess everyone watching this and listening to, I guess, our advice in the moment, I mean, no one should have lost anything, which is great. And I think it as well brings back to the first principles that we do teach in the course, which safety first, take custody of your own keys. If you see risk, action it. Don't just fly by the seat of your pants and just hope it's all going to work out, because you have to take responsibility of that for yourself. I'm sorry, I probably rambled a bit there, but no, I guess it all ties into it. Yeah.
Yeah, really valuable, Sam. Thank you so much for the insights, and yeah, get involved in the competition today for your chance to win a ledger. Woo! Put you on the Steiners there, mate. Love it. Cool. So let's jump into the next thing that I wanted to share very quickly. It's just inflation numbers that came out. Some people might be wondering why the market moved so positively overnight. And why it had the strong run up. The S&P 500 did later retrace. Crypto actually held up really well. We will look at the charts in a second, but just want to have a quick scan over this. So the previous was 6.3. This is for core inflation. So core inflation actually removes some of the components of general inflation, and this is more so what the Fed will use when making that decision around interest rates and how much to increase them. This is more of a core component. So I think it removes energy, doesn't it? Is one of the core things that it removes out of here, Sammy.
It removes, volatility, I guess, from the
which has
metrics.
been wild. I'm in London at the minute, and I was looking at some data that came out around energy costs, and it's like, wow, it's wild.
I saw it just reached a new all-time high in the UK.
There's
reached base load. Crazy.
A lot of wood's getting chopped this year. Very interesting.
That's not good for the climate, is it?
So 6.3 was the previous forecast, 6.2, consensus 6.1, and we came in at 6. So that's really positive that we're still moving in the right direction. It means that interest rates are working, are having an impact. We've been at 6.6 was the all-time high, which wasn't that long ago now. So moving in the right direction. If we look at the inflation, the general inflation, which might be down here. Where are we? No, oh, there we go. Inflation rate. Yep, so inflation rate came in really, really good here as a general. So 7.7 was the previous, 7.6 was the forecast. And I was looking at the forecast and I was thinking to myself, well, if we're only improving by 0.1, then are we really going to go up 0.5 of an interest rate? Or will it be more aggressive? And luckily, it's actually come in well below everything. And that's why the market had a really strong rally. If you are an investor, if you're looking for short-term trades, there is no better time to trade than when this data comes out. Fortunately for me, it's coming out in the afternoon, early afternoon. For you Australians, I was chatting to Steve last night. Steve and I were up trading and chatting together. Steve's our technical analyst, and he's like, I don't know why everyone's not up trading this, because that's the time that you will make money. So today is the announcement for the interest rate. So all eyes on this. You'll see down here, Fed interest rate decision. So forecast is 4.5, consensus 4.5, prior was 4. They have discussed a slowdown in rates, and that was the announcement that Jerome Powell made, and that is the expectation. 4.5 would mean it's a positive thing. Obviously, last time was a 0.75 raise. I believe we've had a 1% earlier this year as well, which was super aggressive. Oh yeah, you got it here. So to me, this is it's a positive move in the right direction, that we are reducing our interest rates. It's likely that next year we'll see 0.25 increases, I think, more likely if inflation continues to come down, which is, it's a double-edged sword. So it's positive that they're reducing how much they're increasing by, but at the same time, they are still increasing it. And the more that the interest rate goes up, the more destructive it is for demand. And that's something that everyone needs to take into consideration. It's not like, okay, interest rates are reducing, everyone's going to flow back into the market. Certainly not the case from where I see it. And Sammy, certainly open to hearing your insight on that as well. Do you think that if we continue to increase in interest rates, but at a slower rate, surely it is more positive that it's a slower rate, but it's still a negative thing that it is increasing?
Yeah, it's crazy, isn't it? Counterintuitive. My thesis is, and I put it with the masterminds the other day, is that I think it's all but assured that we get the 0.5 no matter what now. I think it makes it easier for the Fed to roll into this. Just seeing how the market is kind of positioning, I think it's a really positive thing that they're moving with 0.5, not 0.75. They want to maybe hit this with the market now with 0.5, front load rates as much as possible. There's a bit of a gap now between December and I believe it's February, I think their next rate rise is. So they'll probably use those 2 months to let the data flow through. And after, I think this is the highest, a height in their rate rises. So I don't think they're going to go above 0.5 really again in this aggressive rate cycle. I think now we just move down, move slower. Markets are front running that. So they're front running the pause or the slowdown. So the slowdown comes before the pause, and then eventually the pivot comes. And historically, I know we've all been saying we want to pivot, but the pivot actually marks a point where we're essentially in a recession, market tanks, and then we really don't rally until after that, when the money printers get turned back on and rates get cut. So we're kind of in this Goldilocks zone where, like you said, the markets are really liking the thesis that the slowdown is here. We're going to see 0.25 maybe another 0.25 after that. For me, though, I'm looking at the yield curves and they're just getting out of control. Excuse me, Hugo's just screaming. But yeah, the yield curve controls on the 2-year and the 3-year Treasury bonds, they are, multiples trading above the 10-year and the 30-year. And whenever that happens, historically, without fail, the US is in a recession or it's, heading straight in. And whenever they get that high with the, I guess you could say what's it called? Hard to concentrate with you. The difference between the two rates, when they get as far apart as they are, it kind of puts a ceiling on the Fed on how much higher they can hike. So I'm pretty bullish that this is the top of the aggressive rate cycle, and now we're just going to see that slow down.
Yeah, and what I would say is there is certainly an expectation that based on previous data, we've always gone to 5% in interest rates when inflation has gone above 5%. So you can only look at past data. Why would this time be any different? And sure, the dynamic is slightly different, but at the same time, it's not. We have printed way more money than what we ever have done before, which is a more likely reason to increase the interest rates to try and manage everything, including inflation with that. So I do foresee certainly a slowdown in rates, but I think we're still heading to at least 5% interest rates, which is incredibly disruptive. So until interest rates can start to turn around because they've hit the inflation markers that they want, which I know 2% is the forecast, I think they need to adjust the expectations on that before they start to bring it down. Anything else that you want to share in particular on this, Sammy? So do watch out. I will certainly be trading this tonight. I can let everyone know. I am in trades right now. I caught fortunately the start of the inflation numbers because that's what I trade off, big data like that. And I'm still in the trades. I was certainly nervous as the S&P 500 came crashing down for a short period of time, but crypto held up incredibly well, and I was really impressed. I was sitting there kind of watching move for move, and I was just really surprised with how well it held up. So yeah, interesting.
Yeah. Only thing I'd add to that is I think we just need to pay attention to his language. The fact that the risk markets are now trying to rally this in and they're pricing in a pretty dovish Fed compared to what we've seen is just interesting. And I think he may come out and try and use some language, like you're saying, to say we want to get this to 5%, which would be quite likely and quite plausible in my book. So again, a 0.25 in February and maybe the month after, will they get it just above 5, see inflation actually roll back to that number? They'd be pretty happy with that. But yeah, I think we really need to pay attention to what Powell says, because it should move the market in any direction, which would be interesting. Because sometimes with this, we see a pump into the event and then it's the wrong move. So it could roll back on us. So we just have to be cautious.
Yeah, absolutely. And that's why if I'm trading news, I will always have short-term trades on. I'll always be really active, and I'll be down in the 15-minute time frames. So this has been an incredible move up here. I was concerned as it started to drop back down, purely because of the liquidity vacuum. There's not much trading done in here, and that's why the price moved up so quickly. And as it moves up quickly, it can move down quickly. So here I was watching very closely, saying, okay, is this the end? Should I be getting out of the trade? But it's continued to run, and it's been really, really positive. We're above this level here, which this is more so shorter time frame. If you zoom out, all this data will change. But you can see that there's certainly a lot of trading that's been done in the past around this level. Therefore, if we're above it, which we are now, it's showing strength. So I'm still in the trade, and I'm expecting a continuation of this trade up here as we do move forward. There's a few different cryptos that we're watching, and these are all in our newsletter as well. And we will have a quick look at BNB, so you can see the impact. So you can barely see because the volume profile bar is so high that it touched, went in and touched here. But the move down from bad news, let's have a look. I think that's probably...
It was 12%.
Yeah, about 12%. So down, yeah, it was all the way down to there. So yeah, nearly 13% as a move down. And You've got to be careful here because you don't want to be devil's advocate and say, well, I think Binance is fine, therefore I'm just going to trade it and get something undervalued, because you have to look at risk reward. There is still risk in this play. And I mean, you could, if you really wanted to, you could put in a trade now as regained above the 21 and 200 and put a tight stop loss in underneath. You could do that because I expect that we're going to move up to 290 quickly, but you do have to look at the risk reward of every trade that you make. That's a 5% move up to there. And I think it's going to have to do a lot of work, i.e. positive news, in order to break through. So just some things to think about there. Sammy, I'll bring us back on the screen. I just want to cover off what we're going to be outlining here in the last newsletter of 2022. So I'll give you the dance floor. Why don't you share some insights, and also do mention about the different styles of exchanges that Tristan has recently done analysis on, because I think this is the stuff that's going to perform really well, and it's one of our picks for 2023. So do share, mate, please.
Yeah, absolutely. I actually really love the end of year newsletter, because we get to essentially take stock from the year that was, which has been an absolute roller coaster ride. It's been a heck of a one and a real eye-opener and learning experience for everyone. But the great thing about the December newsletter is that we get to forecast out and look at 2023, look at big new trends, some cool things that we see maybe coming around the corner that maybe you guys haven't thought of. And just things you should be really aware of if you want to potentially make some really large outsized returns if they really fire off. Now, I guess in my eyes, we've got 5. And that may change, but I think that's about right. I'm just writing it now. So again, some things in my head. So Joe, do you want me to go through and at a high level, or would you like me just to run it?
No, I think we'll reserve it for the newsletter.
Yeah, good. I could have given them all away. I could have given them all away.
Tune in, but feel free to mention maybe around the DEXs and the different style of exchanges. So Tristan, our fundamental analyst, one of the craziest, I guess, in-depth people. The write-ups he does is mind-blowing. I remember reading his first one, my jaw hit the table. So he actually analyzed 3 decentralized exchanges, because this is one of the trends that we believe is really going to perform well into 2023. You can get access to that if you sign up. It's one of our recent releases. So mid-month, we do our fundamental analysis piece, and then at the end of the month, we tie everything else in, just to break it up, because the newsletters were, what were they, 80 pages?
At some point, good fun.
So it's too much for one session, so we broke them down. It was wild stuff, but amazing content, just too much in one go to absorb an action. So he just did that. Great value in them and great opportunities to be had. That's where the value is. You forecast what's going to happen into a trend before it happens, like NFTs, like DeFi. If you can see ahead, then you can perform incredibly well, and you have a lot less risk because you can move into several cryptos in a particular sector rather than trying to find one crypto across every sector that's going to perform well. So anything else that you wanted to add, Sammy?
Yeah, I might add with that. One of the trends that we will be covering, we actually covered for our masterminds about 3 or 4 weeks ago. And again, I won't go into what it was, but that actually kind of started firing off. And one of these, it's in the NFT space, but one of them was up about 40% the other day. So I'll be putting that in the newsletter in terms of a trend, because I think it's going to be a real big mover, not necessarily in the short term, but I think mid to longer term as retail participation comes back into the space. And it's kind of like the sleeper. Again, I'll probably say too much, but I'll just leave it there. So and great work on the mentioning the DEXs, because I think that is a pretty obvious trend. We're not really giving too much away there. I think everything that's happening with FTX and Binance, we mentioned that there is going to be a move to the more decentralized stuff. There's going to be so many players looking to vie for positions in that space. There's already a few out there, obviously, but we know that some of them run on Ethereum, and it can be a little bit slow and clunky and whatnot. So they'll be competing with the new boys in CeFi coming in. So very interesting play.
Nice, awesome. Thanks, Sammy. Just a quick reminder for your chance to win a Ledger device Make sure you register for the competition. It's got a few hours left in today. And then tomorrow will be another prize. I'm not sure off the top of my head. I think it might be the Binance merch box that happens tomorrow. And again, a reminder, it means so much to us if you take 2 minutes to jump on the link in the description, leave us a quick review of your experience. If you are a newsletter reader or even a VIP or mastermind graduate client, and you've been through the process and you want to share your love at this time of year, just share your experience with us. That's how we continue to perform really well, and it helps new people that are sitting on the sideline wondering how good we are at what we do, which we think we're very good at what we do. Based on our reviews, that tells us and gives us that feedback. But it's great to get more feedback and more reviews from other people to really reinforce what we do and what we're about. Anyway, guys, we wish you an incredible Christmas break. Do look out for the newsletter. It'll be coming out the last Thursday of the month, as always. Anything else that you want to add, Sam, just to wrap up?
Watch Bitcoin. I think this is a very, very interesting time. Yeah, all right. I'll add this as a little bit of a nugget. So, sorry. Without FTX, I think Bitcoin right now would likely be trading, between that 17,500 and about 26,000. So I think we are severely lagging the rest of the market. The S&P 500, gold's already leading the way into the recession. And depending on what Powell says, but I just feel it's probably going to be positive after that CPI print. So. I think we're due to maybe reclaim that floor, that 17,500. I think we're already there now, but don't be surprised to see us a little bit higher than here. I think this is an interesting time, and then we might be back into that chop above. So yeah, very, very interesting time. Watch Bitcoin and watch those correlations because it's all happening.
There you have it. Thanks, everyone. Thanks for tuning in, and we'll see you in the new year.